Oh, we got 4 people. There's not even 4 on.
I'd like to welcome
There we
back David to the blockchain DLT and DFC
I'm back.
session. If you could all settle down, please.
Yeah, this is the clearing of throat to begin a discussion. When we have a packed agenda like this, it happens. I've been pressed into service a family emergency of the originally designated moderator, so I'm here. I'll ask the dumb guy question. Let all these people talk well about their different topics. I think Leon just let me to it. So anyway, this is a panel on Bitcoin, blockchain, DLTs, DFCs, and disruptive effects on finance. I am not Rick Willard. I'm David True, because I'm still here. We've got Clemens Wan, there we go, who's the director of R3, and I know of R3, but certainly not as much as you do. And Dr. David Wen, the chief scientist of eCurrency. That one I got to hear because currency is fascinating stuff for me. Brad Chun, of Muti. Did I get it right? And finally, Professor Sharon O'Halloran, the professor of international and public affairs, Columbia University. So I think one way to start it, because we've got this fairly broad rubric, and I'm sure each of you touch on it, would be to sort of talk just from your perspective, the disruptive effect that what you're working on has based on this lengthy title we've got, a Bitcoin, blockchain, et cetera, et cetera. And maybe just to mix it up, we'll start from the other side.
So my name is David Wen. I'm chief scientist of eCurrency. I think eCurrency is a company that we have been trying to singly focus on providing a solution for central bank issued digital currency. And I think maybe you'll say why that's relevant to digital financial service. In fact, most people will say that, okay, so the mobile money has not been really driven by central bank. A lot of financial inclusion are done probably better with all of those mobile monies. So we have been looking at this problem for quite a while, and especially actually as a solution initially for solving those problems of mobile money, mobile financial service. As a matter of fact, I think I met Leon at a digital financial service focus group that Gates Foundation, Jason and Moni mentioned, and it is within that context where we thought one of the problems that those working groups uncovered was mobile money was growing, but actually it have problems like interoperability. Today, I think it was very good. This is the last session because all of those problems have been discussed ahead of time, so I don't have to repeat. So interoperability and the regulatory issues, right? So central bank have to constantly figure out who are distributing those mobile wallets and everything. And of course, there's security issues. So we thought about this problem, and we thought, okay, digital fiat currency, if we can turn something that can transmit remotely, but just like paper currency. Okay, stay with me a little bit. It's a hard jump to the how, but let me describe what. So if we could create some form of a digital object, digital fiat currency that can have all the functions of paper currency due to the central bank, to the banks who distributed them, and all the consumers that use them, that would be fantastic. Unfortunately, I cannot, I don't have time to go to the house, but what I'm trying to focus here. It's not one technology, it's not blockchain, it's not Bitcoin, because what we have to focus on the digital fiat currency is what's its function. So you have to meet those requirements. By the way, before I hand off, and I want to do a little bit of introduction to the continuation of that digital financial service focus group that wonderfully done by Leon and the Gates Foundation is continuing on the ITU focus group on digital fiat currency. Now people, including ISO and standard bodies, and people understand this is inevitable. So I'm here to letting people know that this is existing, and you can ask me later. So we're trying to create a consortium of people, including central banks, the regulators, banks, and the mobile money operators, any type of DFS, because the digital fiat currency should be like the current paper currency that is printed or issued by central bank, but everybody should be able to circulate it. And those channels, I would call mobile money, PayPal, whatever, they're just pipes. So we designed this system, the digital fiat currency system, so that you can separate that instrument from the system itself. That brings you interoperability, because just like paper cash, I don't care how you store it. You can put it in a wallet, you can put everything else, and you give it to somebody else, it's $10. So we are trying to create a forum and association of vendors or technology providers, central banks, and security professionals, so that we can really look into what the requirements of digital fiat currency and what's the implementation of them, because we are already implementing them in certain countries commercially. So we can all look at that. So that's my introduction.
Please.
So great. So I'm Sharon O'Halloran, and I'm the George Blumenthal Professor of Political Economics, and I'm also the originator of the Columbia University FinTech Lab at the Data Science Institute. And there what we're looking at is developing and democratizing an open source risk engine and a data visualization tool. And this is our way in which we can get the understanding, analyzing, and evaluating different types of risk metrics, both to large, small, and different types of institutions, as well as to regulators. And when we think about what the role of this panel is, the use of blockchains and bitcoins and so forth, here then is not only fintech, but also regtech, and the way in which compliance and regulation, data protocols and standards interrelate with our understanding of financial risk management, again, through each of these institutions, financial institutions. And so that's pretty much the way in which we're cutting into this. The issues around compliance around blockchain, I'm going to focus particularly around blockchain and the distributive ledger, and in particular, understanding the way in which data structures, and data protocols come into play with this are really important, because this is the way in which regulators and regulations are going to lead us to allow for compliance and the reduction of costs and efficiencies within the system. And so what we're seeing now is the extent to which the blockchain and the distributive ledger will be utilized and adapted most regularly throughout the system has a lot to do with the extent to which this becomes a regulatory standard. So we're looking at the SEC and the use of smart contracts. We're looking at the Federal Reserve and their ability now to adopt the different types of standard protocols for evaluating different types of funds, and the way in which they put out metrics on different risk and analytics and so forth, how they evaluate, ask for compliance, and ask for the data in which they evaluate and look at for compliance. And those are becoming important issues. The distributive ledger is a way in which to have cost management across each of those institutions, as well as a way to ensure that the data is being processed and reported in the ways that are consistent with the protocols that the regulators are asking for. So this is the different ways that I think in which the blockchain can actually facilitate risk and risk management issues. Moreover, I think it's also one of the key issues that we're going to find to the extent to which it'll actually be adopted in the future.
And it's dependent on the standards, on some sort of consensus.
Yeah.
Yeah.
Let's just put it this way, at least in financial institutions, if the SEC refuses to allow for smart contracts,
Yep.
it's a no-go.
Hi, I'm Clemens Wan from R3. And just to give a bit more background and context, I'd like to frame this because my in-laws asked me if I work for a Bitcoin company, and I had to kind of clarify. So just to give the two sections of it, there's the permissionless world. This is the cryptocurrency, Bitcoin, Ether, ICOs, that type of world, which I think a lot of finance companies to think about investments, because it does in fact affect the market cap and liquidity, as well as regulators, because there are anonymous trades that are being done around the world, there's cross-border and such. And then there's the enterprise world, the permissioned network, right, where you have to KYN, or know your node, know your client, of all of the nodes that are added to that network. This is the world that I live in, is in the permission world, which is much more of an IT infrastructure regulatory play. There's a lot of talk about digitization and tokenizing of particular assets. That was obviously done a while ago in the public world, but the main problem was the way that it was processed in the proof of work, the mining or the validation mechanism. There was no regulation that said when that was actually processed. So transactions that are published globally to all institutions, there was no regulation that said, even though it was encrypted, that it did cross borders to OFAC nations. And so a lot of those restrictions caused R3, which is a consortium of 80 plus institutions. We have regulators, we have financial institutions, we have exchanges, we have insurance companies to explore the industry specifically for market infrastructure and regulatory reasons. And we've noticed a lot of companies that have started and built around the blockchain hype. And what we've tried to do is distill what the companies needed, which is, fundamentally, it was the immutability, the trustworthiness of that data, the sharing and mutualization of resources to support that data, and then build that into the requirements of a top-down company. And so Corda, which is this platform that we go towards, most people that look at enterprise permission networks usually have three choices. There's the enterprise Ethereum route, which is led with JP Morgan over there, hi guys, and Quorum, as well as the enterprise Ethereum group. And then there's the IBM Fabric side, which is around the Hyperledger Linux project. And then there's the R3 Corda side, which is around the space that I'm exploring. And so Corda is public as of, I think, 15 minutes ago in this beta version. I just saw a blog post from our CTO, Rich Gennell-Brown. We went open source November 31st, but we have our first beta release.
So is that with the three examples you laid out there from IBM and from Ethereum and from you, are they sort of competing then for the same space?
Those are the three open source ones, and I would say that R3 is focused on financial agreements in the financial industry and other sectors, but the other two may have links to the public space as well as to just general all-purpose type.
So what you're working on is somewhat related to what Professor O'Halloran was talking about getting that sort of consensus together to make it more effective in the permission space.
That's correct. Yeah.
Okay. Bingo.
Hi, my name is Brad Chun. I'm the CEO of Muti, which is a digital identity company. So I really liked the insights in the last panel. It was very refreshing to hear people that weren't necessarily in the blockchain space where I sort of live right now, because it's sort of an echo chamber in terms of our understanding of the world outside of blockchain. I started off in technology and in finance. I worked in banking. I ran global emerging market trading. Got into blockchain sort of by luck. I left banking in 2010 and started mining Bitcoin. So very early adopter, didn't really realize the sort of revolutionary potential of blockchain technology until, I don't know, I guess it was around the Bitcoin price rise in like 2013. And I was like, wait, I did something with that Bitcoin thing a long time ago and I had to go find, Bitcoins on an old computer. And then, even then looking at the technology, I said, well, it's great as an interesting speculative vehicle for price appreciation. But what utility does it have outside of that? And we're all sort of starting down this line of trying to figure out. We're really early days in trying to figure out how we apply this digital cash-based system to all these other potential use cases. This panel is specifically around financial disruption using blockchain-based technology. And so we're very involved in this space. From 2013 on, I basically started a consulting company, and we did a lot of work building more on the public network side, consensus algorithms and related technologies for people to build, to deploy into the market. And then, from, I guess, 2015 on, we started kind of doing our own ventures. I launched a cryptocurrency hedge fund that trades in the space, so more in the public asset side, ICO side. And then I focused a lot of time on digital identity, which ultimately is like the core of everything that we're trying to do within this digital ledger space, regardless if you're doing a public ledger or a private ledger. It all comes down to like this trusted component of like who's interfacing with the network. And so that's where we spent like a lot of our time researching. And so, I'm really glad they focused on that. I had that identity panel, really good insights there. So, from that perspective, I guess turned over to, our moderator and see if there's, I can answer, on the sort of public network ICO side of like what I'm seeing in terms of deployments internationally and globally, and we consult and do other projects, all over the world, in Europe and in Asia and Brazil. I'm leaving to London like Saturday, and I'm going all the way through Europe and Asia, and coming back at the end of July, all blockchain meetings. So, yeah.
So in the identity stuff that we just finished up with, I'm interested in how what you are running or what you have built, how does it establish the identity?
We are, there's a lot of blockchain companies looking at identity just because it's a missing component that exists. Our
clearly.
particular view at Muti is we believe that we focus on self-sovereign identity, but we view that it should be very private. And so a lot of the stuff I heard in the prior panel reflected our views around privacy. I like the way that GDPR is set up, specifically around consumer protection. In talking about these like identity rollouts and deployments everywhere, what I'm seeing globally is actually not much of this, with the exception of Europe, who's always been kind of ahead in terms of consumer privacy. A very, very like big void in terms of like valuing consumer privacy and identity or personally identifiable information. When a government or a bank looks at like identity, they look at it, they optimize around a couple of things. They optimize around like how much information can they get so that they can mitigate for like fraud or something like that. And like if you optimize just on that one thing, you're gonna come up with like some really like scary system that you can do a lot of things with. And like they mentioned weaponizing identity, which has happened in the past. And so we focus a lot around, we have patented crypto around ring signatures and zero knowledge proofs, and we're blockchain agnostic. Our devs a lot of them came from the Monero project, which is in the public space, looking at anonymous payments. And so we want to apply some of that to, federated and attested identity claims also.
So that kind of bounces back to Clemens and Professor O'Hallahan, because when you're moving into that space, what are some of the roadblocks you see in coming up with a shared point of view? So in the permissioned area, people will be confident in it. What are the challenges you see in getting there?
So just on the challenges, there's obviously real concerns about what are trusted parties? How do you identify the trusted parties? Given permissions and on down the line. So those, just the logistics parts are problematic. And then on the privacy issues, how do you have these predefined identity lists, and how do they maintain them, and where do you maintain them? So what I've seen is the way in which the way the security and the technology has been building out is there's the encryption part, right, that you have, and there you have the algorithms that scramble and then unscramble, and that's way. Now they're looking at things such as the biomedical ones, where you actually have it attached to molecular structure on the data, and that's an interesting way. But then the next part of it is taking as they do with the repository, and breaking it apart and having people have access to parts of the puzzle. Mm-hmm. Or keys, if you will. There people can then turn on. But then the question is, how do you safeguard the keys? How do you safeguard the thing? So you go back to the security. But being able to break it down into those parts, I think is really going to make it safe. You're never going to have a purely safe system. But I think those are the limits that are going to be seen. Yeah.
Yeah, in my world, I think because we live in the B2B institutional world, so we care about network identity much more, and kind of physical hardware or the identity of LEI of that particular company. And so it's less about the consumer world or the retail world, and it's more about the identity of that particular company when it starts to enter our testnet or our network. And the way that Corda works, there are actual physical nodes in on-premise or either by cloud owned by our consortium members. And as they join and as they run the different distributed applications that they run, that they would use that as their private signature to sign transactions.
So each of those nodes would have their signature, would have the private key.
Yeah, they have a private key associated with their IP address, that, as well as their physical location.
So that's kind of a nice segue over to the idea. I was going to say at the beginning that with Dr. Wen, the idea of a fiat digital currency. Typically, you hear digital currency and it's not fiat. So there's a question there: is how do you make that? How do you sell that? How do you overcome some of these problems about ensuring whose it is in that world? I'm sure you're confronting that in what you do.
Yeah, absolutely. I think so. For us, digital fiat currency is a very complicated system because it requires all this financial institute and all this other people distribute it. So think about the paper currency. The technology goes into printing, making sure it's secure. It's quite a lot. But once you securitize it, and then all these people that distribute it only have to guard the safe and so on and so forth. That's two different type of security. One is how do you make sure people cannot counterfeit, right? The other one is, well, once you have this $10, how do I guard it? And there's all kinds of ways to guard it. So we do not build, so to speak, authentication of user to access a digital currency into that system itself. So what we are trying to do is making sure the digital currency, like today, the difference between a check and a paper currency is the check has my signature, like your private key, blah, 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 and then the other people verifies it. It is just the instruction to move the money. It does not move the money, the check. The currency, you can send it in an envelope, which I do when I was very small in China. There was not so many branches, and the people can just put money in a registered letter with little window, so that if you look at it, that money does not have anybody else's ownership who is in charge of authenticating the people who send it and receive it, post office. So today, I would say that the model that we build on is to not create another system to authenticate people, solving all the problem, is to say, well, PayPal doesn't have a problem of double spending. Why do you create something and then solve it? So if PayPal can solve that problem, identifying you, know your customer and so on. So we, for example, in this case, we didn't do with PayPal. We focus on developing countries. We have multiple mobile money providers. So our system is used at the back end only, so that they are in charge of authenticating the user, but access to that digital fiat currency is after they authenticated. So that's why I think early on somebody mentioned if you lose the key, you lose the $10.
Yep.
That's not how it's supposed to, even though if you really hardcore, you say, here's my money, I lost $10. Yeah, so like I have cash, I throw it to the pond. No, that's up to you. But if the system is really working, you should really separate the authentication and access to that money itself. I say that because I spent 15 years, I designed the DoD's CAC system and the PIV system. I don't know if you have government employee here. If you have a PIV card, yeah, I did a lot of work on that. And then I moved on to, of course, digital identity management, the previous panel said there's a lot of work to be done there, but I moved on because digital fiat currency is in a way an identity. It's the identity of the central bank, the ability to say that's $10 and how to secure it. So our approach is very different from, picking up a way of secure some transaction, because there's many ways to secure transaction. I mean, when I heard the blockchain's ways of, okay, you can look at all the history. Well, IBM's solution, which I looked at before, was all the transaction of Visa card and whatnot is immediately burned into a CD every hour or something, I forgot. So your transaction is always immutable. So you can do that. But what we're trying to do is you can have all kinds of payment systems that in charge of authenticating liabilities and so on and so forth. So the digital fiat currency need to leverage that infrastructure. Mm-hmm. So if the money is $10 in your wallet, you may not want to authenticate. It's like, the bus pass. You lost it. You don't want to go through all the trouble. But if I have $1,000, $10,000, oh yeah, I want to make sure I have triple authentication, right? So PayPal uses password and username. It works for them. So why change? And then they are the ones to estimate the risk of how much that system is destroyed. Okay, that's for me.
Yeah,
comment. Carry on.
Quick comment. This panel is, I guess, about some innovation. We're getting into like the weeds on some of these topics. I think for me at a high level where I saw within my involvement within the blockchain and digital ledger space, and people say, why do you need to use blockchain for that? Like, and these guys at R3 they spent a ton of money, and then they came up with the solution that like you don't really need to use blockchain for a lot of these things, and that's true. I agree.
I'm very happy to hear that.
Yeah, they got a lot of flack for that. I mean, I probably trolled them on Twitter probably more than most, but it's all good because we're at the stage where we don't really know where the technology lies. But on my own personal journey within this space, what I've been realizing, and this is a recent realization after working in this space for a long time. I mean, over 6 years that I've been in this space.
It's a long time in this space.
That's a long time in this space, right? I had like some realizations recently with some of our client deployments and looking at stuff we're doing. We're doing this project in Brazil and rolling out some like a micro lending platform for sustainable development and payments. And we're doing something in Europe and something in Asia. And with these projects, I'm like, why are we using blockchain? Some of our clients say like, oh, we need blockchain for that. Well, okay, like fine, we'll do it. Like begrudgingly, I'll put like a private blockchain like on a server and like we'll write data to it. And I'm like, can't we do this with like a Maria DAB instead of like a private blockchain? And yeah, the answer is yes, but they're like, no, but everyone's using blockchain, right? So where I see, so where I see blockchain, actually, the paradigm shift for me is actually in self-sovereign identity. And so this was, I don't know if it was touched on too much in the prior panel, but self-sovereign identity is basically having control of something. And in the digital world, we're talking about digital financial services, it's about putting a private key, essentially it boils down to putting a private key in your device or something that links you to a multi-factor, like a physical device that you have.
Something that we talked about a bit on the security panel earlier.
Okay, on the security panel. And, having the ability to like then do a transaction from like the edge, that is where the paradigm shift is. And it's
What's the edge?
The edge is like, so.
I mean, I know he plays
yeah, yeah. So right now everything is basically centralized services. We have centralized clearing and settlement, right? All the banks, all your checks, they go through like, clearing houses, stocks, everything, right? Even when you like log into any website, it happens through like a centralized.
And that's where the edge comes from because of distributed nature. Yeah.
Yeah, and so so we want to separate it from fully distributed. So there's one thing about like centralized and decentralized, and then there's another thing about like self-sovereign and not self-sovereign. Or like I also put that in the centralized bucket, and those are two sort of separate things. On the Bitcoin side, we all love the decentralized part because it's cool. Like you don't have to deal with the central counterparty. But when we start to integrate that into businesses, it becomes a real problem because businesses are essentially a central conduit or point that we need to integrate with. However, the self-sovereign side of things actually can interface very well with businesses. And we're seeing this a lot. And it opens up a lot of interesting new corridors. For instance, what we're doing in Brazil, because like internet is really bad, even in like Sao Paulo, like which is like their biggest city, internet is like really bad on your cell phone. Like even if you have, the best service there. And so it drops off all the time. Well, something you can do with self-sovereign identity is you can have like payments on a mobile wallet, but you can digitally sign a message that like you sent it to somebody and they can receive this message. And you can upload this after the fact, like post facto, but then we have cryptographic evidence that the transaction actually happened. So like now you can do offline payments. You can only do that with self-sovereign identity. Yeah. You can't do this with something else. Another interesting point I saw around self-sovereign identity and how it relates to what I've been talking to banks about in driving the use case for blockchain is a shift of liability from the businesses to the consumers. So we saw this in credit card processing, like in Europe, we have like 3D Secure, like you do online payments. As a vendor, as long as a consumer comes in through this one angle, which is like very strong authentication, and there's fraud in that channel, they're not responsible for it. So of course, like, as a vendor, you'd be like, shoot, like then everyone should use that channel, right? David brought up a point about authentication and PayPal and multi-factor authentication and how it works. And it works good. It works good enough, like we get by, but like, I don't know anyone that works specifically at PayPal. My buddy works at Square, and all of these kind of use a very similar type of mechanism around identity. And there is a big issue about fraud. I don't know how many of you guys ever used PayPal and had a fraudulent transaction. I do stuff on eBay all the time. And, the percentage is pretty low, but you still have like...
In aggregate, it's a big number.
In aggregate, it's a pretty big number. And so we need to fix that. So...
we got 2 minutes remaining, and then we're going to go into questions. I'm sure we'll have some questions. Any other further comments? We're talking a little bit there, kind of maybe bringing it back out of the weeds to where the disruption will be happening and the things you're seeing.
I just wanted to say, like, on a lot of the stuff goes back to the regulations, like on, everything is required to go over clearing. So even if you wanted to be at the edge, you're required to clear through a central party. So, you know, to the extent that they don't allow OTCs, over the counter, to continue, yeah.
Anything else?
I think one thing I would say is just follow on that issue of regulation. So the central bank issued digital fiat currency is actually a legal doctrine. It's more, so it's a piece of paper. Why does everybody trust it? It's more than technology. Of course, it has a technology component, but it's not. The technology does not change the legal or business or the governance of it. The technology secures it, makes it harder for anybody to counterfeit. That's the most important thing. Why? Because central bank wants to issue certain amount of it so that only that amount was circulating and used exclusively for exchange of value, right? So there are all kinds of money. I mean, gold and everything has value. That's an asset. But there is one type of money that is costless, what I call costless, frictionless, and riskless. The costless part of cash can be debated because the central bank, have to,
There is something
spend
involved in
money,
producing,
but
yes.
it's to the user is free. So I think what we're trying to achieve also is the same, is to try to say we're moving to digital world. Is the central bank going to do the same thing for what they did for the most financially inclusive instrument up to, I guess, this point, which is cash, and to make it costless, frictionless, and riskless medium of exchange for the digital life. That's what we're trying to do. And everybody can use it, including all the blockchain. And if Bitcoin exchange wants to do that.
So that would be the fiat currency that it
Yes,
becomes at the
that's
end, yeah?
it.
Although we did find in the crisis that money market were not riskless, just because.
Yes, that's
Well,
why.
yeah,
that-
that's
that's
true,
why.
that's true.
That's why you especially separate these two things.
That's a separate
The
thing.
part that you says no interest free,
Yes.
uses for exchange is not the part of the money you deposit and buy the stock. Yeah.
Very quick, because we're moving into questions. We're out of time.
Okay,
Please.
just really quick note on the fiat-backed tokens. This is obviously something that people feel like we call them stable coins, right? And it's a very good thing so that people are comfortable with like a stable currency, and you can transact in the economy because you know exact pricing and everything. But the risks actually tend to be, from what we're seeing, actually not in the actual technology deployment. And there's multiple implementations of these stable coins. We have Bit on Kolu, which is a Bitcoin open asset protocol, and we have Tether, which runs on Omni. So, and then Ethereum, it's trivial to do it on a contract, and we could even do it using Corda if we wanted to. And that is actually not where the problem is. The problem lies in actually the interface with the actual fiat and the banking system itself. So you have custody of like a lot of money somewhere, and then
Well, that sounds like what the Professor Halloran was mentioning, where that interface takes place. Ultimately, it has to be cleared. I think we're in question land, and I know there was a question there. If your voice were as loud as mine, you wouldn't need that.
I'm Bobby Karana. I have a blockchain startup, so I would like to get your expert opinion on this. So a lot of financial organizations, as you know, are doing use cases around blockchain, POCs, and pilots. I think throughout the end of this year. Do we have a rough timeline as to when these use cases will go into production? Because some of these use cases will be deployed. Like let's say there's direct advantage to the capital markets. But what about the other use cases? Will they actually see adoption? Will they be deployed in production? And what are the challenges to deployment? Is it the standards or any other industry challenges? Perhaps, Brad, I'll direct it to you.
Oh, sure. I'll start and you guys can comment. I think we're seeing it depends on what the innovation is. We're seeing a lot of regulatory hurdles, especially like in developed markets that have robust bodies of law that specifically dictate things like exactly how you're supposed to authenticate someone or exactly, so they don't necessarily match up because the technology has evolved so quickly that it doesn't really match. And so the professor was saying, even if we can do decentralized payments and settlement and all these things, it doesn't mean it's actually legal to do it under certain jurisdictions or frameworks. And so we have to kind of work around that. And so that's part of the issue. But we're seeing in sort of less regulated areas like land and title registry or people are saying instead of transmission of value, we're just doing a messaging system like Swift, right? Like then that's not really regulated. Oh, it's a triple entry accounting system. It's like, you know, it's not like actually the main accounting system. It's just like it's a backup layer for audit, right? And you're like, okay, sure, it's a good Sarbanes-Oxley 404 control for compliance. Like that's cool. Why don't you deploy it and show us how it's better? So you're going to see a lot of shadow systems being deployed.
Yeah, I would say that it's mostly with adoption operations who's going to support it. So the technology is obviously moving very quickly. A lot of things are happening in parallel. A lot of people are building, and we're engaging regulators and everything's. I think it's in terms of timeline. With Corda's going to have its version 1 by the end of the year, which is backwards compatible, so people can start building top-of-stack applications on it. And I think the first you'll get a lot of pilots, and then you'll start to see that the pilot to production piece needs to be discussed amongst the parties that want to run that network, right? And I think that the conversation has already started very, very early in order to get architecture comfortable with, like for example, it likely takes 3 months to even procure, you know, a cloud service for some of these banks. Most of them don't even have that like cloud permission to even run those in their laboratories. And so to get that into a interim state where, you know, they have all this legacy system and then they have to migrate some data or at least create some type of separate, you know, blockchain world on one end and then the old system world on the other end, that kind of bifurcates where they can interoperate in their own system. So they're very conscious of where that interim state is.
Just
Please, carry on.
Just to a lot of times what you're seeing quickly is the cases where the costs, like the fee structure and so forth, like in the mutual funds that are being squeezed down, where you need to include these types of efficiencies through the distributive ledger. So there's a lot of push that way. Moreover, the regulators are seeing on the mutual funds, this is on the back end of having the risk analytics and using the fintech as a way to regulate or to manage the risk. So by combining those two, that might be a way in which you can clump into it. So that is one thing I've seen. Just throw that in.
I think we got one other question, please.
Clemens, my question is to you, is that the approach of most blockchain companies has been really to get early adopters, meaning banks. But is there another avenue, which is, given that we're fundamentally in replacement markets in most vertical software industries, why not go to trade finance vendors who, if you get a trade finance vendor to adopt blockchain, they could roll it out and deploy it as a next-gen application for 100 installations? Is it because some of the blockchain providers are really masking as professional services companies, using their toolkits to drive projects and revenue, but really aren't driving necessarily vertical application adoption?
Yeah, that's a good question. I think actually most people are exploring the supply chain and trade finance industry as well as the insurance industry because there are fewer regulations in that space. And well, we've been personally working with lawyers and law firms and trying to figure out, because in the essence, Corda works with legal agreements, so it's just moving agreements between parties and seeing the evolution of those agreements as they go through different trade life cycles. So that applies to multiple industries. We've been focusing with financial services, but they do have trade finance businesses. So a letter of credit, for example, involves banks and throughout that entire chain. And I think that it is a vast industry. Everybody's going to try to make money off of it. So you will have consulting companies that are trying to find different pieces and different tools to explore that.
But the top 5 trade finance software companies who dominate the top 500
Yep.
banks, not one of them has been approached by a blockchain company to work with them.
So I have a different take, is that open source is where it's going, and they want proprietary. So it's not necessary. So that it's not necessary. If you're giving something away, it's pretty hard for them. Since I give risk engines away, I get lots of people saying I'm competition, and but I'm not selling anything.
I think that is a wrap to a very interesting discussion. I thank the panelists very, very much and all you for your questions.